Hi traders, welcome to this week's pre-weekly market review by Trade Genius Group. We're looking at some of these pairs following the CHF disaster, one might say, from last week. We're going to come and assess the CHF catastrophe actually in this week's technical outlook. But before we do so, just a quick heads up really. Basically, what we're seeing in the dollar index, remember we're tracking the US dollar at our group very heavily because of the continued strength that this currency has been showing over the last several months in particular. Basically, yeah, this dollar has sort of reached a very significant resistance level. It's kind of overtaken previous resistances in the past, but it's lingering around those prices. What you're looking at here is a monthly chart. You can see basically 10 years back of the dollar index. So you're looking at the strength and weakness of the dollar. And we see that the major swings indicated by these arrows are showing usually the typical distances in price that the dollar as an index tends to play out before making significant retracements. By retracements, I mean pullbacks. In other words, changes in trend. So if it was making a bullish rally or an upward buy trend with dollar strength after a certain amount, and we see this amount as being around 20 odd points, it would then turn around in its direction for a retracement. And we see that here mainly in the drop that took place obviously in the 2007-8 financial crisis, and now in this interim recovery period which has kind of started late 2011, but more predominantly lifted off quite dramatically in 2014 without any single retracement. So keep an eye on that, guys. It's a make or break time, we feel, for the dollar this year, but the next few months really give it a chance of pullbacks before April time and May, where we're going to see more about interest rate hikes and that kind of prospect emerging in real terms. Other than that, we are basically going to jump straight to it and update you on the trades such as the euro in light of what's happening this week in the market with the ECB press conference on Thursday and the CHF disaster of last week. Let's have a look at it, guys. This is the incident. The bank basically let go of their pegged 1.2 level. Basically, the Swiss bank have been propping up this pair and supporting it at a 1.2 rate. This benchmark was completely broken and the Swiss bank caved in, and you can see there the huge spike which led to many brokers not being able to supply prices, not getting price quotes to match buyers with sellers, and basically customers' accounts went into deficit, and this deficit was not taken on the client's behalf but passed on to the brokers, causing a lot of havoc in the market. Many of the brokers seem to have survived this now, but that pair obviously has affected a lot of our other currencies, notably the euro. We can see here the euro dollar has basically been in a bearish trend all the way since mid 2014, and we're right on the support line here. If you look on a monthly chart, we've shown it to you there, you can see it very clearly. So 1.15 seems to be offering a very substantial support with a make or break type scenario, and I think we're going to get that clarity this week on Thursday with the ECB press conference. It's high time they came out and delivered a message to the market that is either going to instill confidence in the euro or else possibly be the beginning of a potential breakup. We're seeing threats from Greece, we're seeing a lot of other comments coming out from Denmark, and countries in the periphery that are talking very negatively about being part of the Eurozone. Interest rates kept on getting cut in 2014, and the rate has just been basically falling ever since. So together with deflation, we really need to see what's going to happen there, and it's been causing a lot of emerging trends in safe havens, traditional safer assets like gold, and that's what we're looking at here, which has picked up all the way from 1127 back up towards 1300, which we see as a strong resistance point, but with potential for further breakouts. We can see here now on a weekly chart, this is the gold trend that you've been having throughout the market since 2013. Okay, it's been ranging pretty nicely with a bias to the downside, but this has followed through nicely now. The only difference is the fundamentals are kind of much more in support of gold than they have ever been before. What I mean by that is we're seeing potential dollar pullbacks for the next few months. We're seeing risk aversion with traders in shock still from Russia's collapse. Oil's been weak. Euro's now looking terrible. And so these safer cash held assets like gold are becoming more and more attractive. And thus you may want to really consider this as a longer term investment, certainly for Q1 of this year. Okay, so you've got till 1300 to make another make or break barrier based decision. And in the meantime, we've moved on now to look at the dollar yen, another safe haven, and that is the Japanese currency. So the Japanese currency being a complete disaster as far as buy trades go, and it's been weakening and weakening and weakening like crazy since 2013. But recently, the return or the current protocol towards safe havens is giving that potential trade a little look in at strengthening once again, and maybe at least retracing from these highs around 120, 150 down towards previous support levels, which we just showed you on the chart, around about 111, 112. Okay, you can see here on a monthly chart, guys, we're also at a major resistance barrier on the dollar yen. This is the dollar yen resistance that we've seen around 121, 123, not only in 2000, in 98, in 2002, we saw it very heavily in 2007 and 8 when the market collapsed. Okay, so those kinds of sensitive times on the fundamentals are very much calls to action for going long on the Japanese yen, aka shorting the dollar yen as a trade. So you really want to keep an eye on that. And there's some very big news out this week, and it's going to be very, very much focused on the euro dollar, but it's coupled with Japanese monetary policy statements that are coming out on Wednesday, a day before. Okay, so just a quick recap. You do have Wednesday's Japanese monetary policy, Thursday's euro interest rate and massively awaited press conference, and then surrounding that you've got Tuesday's European economic sentiment data, and then Friday GBP and CAD, Canadian dollar retail sales. Okay, have a very, very good and safe week on the markets, guys. Keep your stops tight and your risk reward positive, and trade safe.